All right. So, welcome everybody. Let's put this up. So, welcome to the 13th period. This over. That's all my information. So, the 13th period featuring special guest Cata Accounting. So I will be hosting the webinar series, and of course, I am Tanya Help, founder of the Cloud Bookkeeping Services and Tanya's Bookkeepers Bootcamp. A little bit about me: I'm a 2017 Intuit Firm of the Future runner-up. I am a certified professional bookkeeper. I'm a current member of the Intuit Trainer Writer Network, 2017 Black Swan alumni, PBO Advanced, a certified pro advisor. I'm also a certified desktop pro advisor, a volunteer mentor through Futurepreneur Canada, with over 20 years bookkeeping and income tax experience combined. And I guess that's it for me. And as I said, this is a webinar series that I'm hosting for Cata Accounting, which will hopefully help a lot of bookkeepers. A little bit about Cata: I've actually been dealing with Jonathan and most recently Bob as part of the Cata Accounting team for, I don't know, Jonathan and I met probably 2 years ago. Wonderful to collaborate with, and absolutely loves it. He wants to help educate the bookkeeper, make it a nice make it a great seamless process between the bookkeeper and accounting. And I just can't say enough about Jonathan. Consider him a very good friend of mine. And of course, Bob. We met Bob just recently, but Bob is, of course, a very welcome addition to the family as well. So I guess that's a bit about it for me. I will share over now to your screen. Or I guess Jonathan or Bob, whoever is going to be doing this, go ahead and take control of sharing your screen, and you can take it away.
All right, I'm just loading up my sharing now. So everybody should be able to see the title screen of the presentation.
It's starting to load.
Starting to load,
there,
okay.
Perfect.
Well, first of all, I'd like to say, Tanya, thank you so much for the wonderful introduction. Yes, we've been collaborating for, I guess it's been about 2 years now, yeah. And between Bob has a significant amount of experience and was an absolutely amazing addition to Cata Accounting. I'm very, very lucky to have him. And it was actually Bob's idea to do these webinars because we found consistent issues from the files we're getting from a variety of bookkeepers. So we call this the 13th period. Year end, right? You do your 12 months, you're all done, right? Everything's done. You can send it to the accountant as is. Not exactly. There needs to be a certain degree of scrutiny and review of accounts. And this is what we're going to talk about today, is just some of the areas where we find there are a lot of issues. Bob, anytime if you want to jump in and interject, please do.
Okay, thank you.
Did you have anything to add before I move on?
Just that as part of this series, we do intend to deal with individual topics. So this particular webinar is meant just to be an overview.
Yeah, really short, really sweet, just to give an idea, get the juices flowing about what we expect to see as accountants and some of the areas where we end up spending time, which of course, if we spend more time on a T2 return, it does inflate the cost for the client. So, limit the back and forth and so on, and it can be very, very helpful. So, oh, we forgot to resize. So the point of this is, once you're done the 12 months, there can be a significant amount of work left. So much work that it's practically like doing another month. Now, for anyone who is using value pricing, that needs to be considered when you're formulating how much you're going to bill your clients on a regular basis. At our firm, for our few value pricing clients, we do exactly that. We essentially figure out how much work there is per month and then add an extra month to cover and then divide by 12. And that just pretty much says what I just said. So there's almost always additional work that needs to be done. There are certain areas we're always going to review as accountants. We're always going to review the amortization entries. We're always going to want to review every single legal invoice because there's slightly different treatment depending on what the legal invoice is about. Anything related to corporate structure, trademarks, things like that might have to be amortized over time. So that's an area that we always look at. There are, of course, the tax accounts that we look at. We'll be getting into most of these individually at a later time. So in the future, every month, the last Wednesday of every month, we're going to be doing these webinars, and we're going to be we're going to be reviewing the individual types of accounts. So some of those examples might be bank cards, banks and credit cards. Has anyone ever noticed that when they look at a reconciliation report, the registered balance does not match what's on the balance sheet? That's a little idiosyncrasy of QBO that has been a challenge. Does everyone review accounts receivable for bad debt? Is there an inventory count done? Is there a leakage or an inventory shrinkage number booked, a bad debt booked for the AR? These types of things. So these are some of the topics that we're going to be addressing over the course of this series. For now, we're just going to have a very, very quick talk about a couple of them. Inventory. We've noticed that a lot of books come to us with no count and sometimes no change to the inventory. I've seen inventory come to us as a negative number before. There's many different things, but this is one of the areas that we're going to be focusing on in one of our later webinars. And as Bob always loves to point out, potential sources of revenue for both us and bookkeepers. Maybe the client needs help. Maybe they need some guidance doing that count. So there might be an opportunity there. This is another area that we're frequently finding challenges with, especially when it comes to leasing equipment. For some reason, a lot of what we get does not indicate any interest being booked against a lease or against a mortgage. And those schedules, those things we need to have. And then finally, Bob, why don't you talk a little bit about this one? This has kind of been your baby over the last little while.
Yeah. I'd really like to move on from these income tax liability accounts, but just to say a few words about it, it's an account that's really easy to get messed up in. People aren't sure about whether a transaction is HST or a payroll payment to the authorities, or whether it's income tax. And if it is income tax, we sometimes don't know which financial period it relates to. So it's really important to capture that information. And there are several different sources where the information comes from. The accountant or the client will process entries in their liability account. You have to make sure that if CRA does something, Revenue Canada, their transactions are picked. Sometimes they do things independently, and the slip or the notification isn't available or gets lost. So we have to link in with the CRA information and ensure that that is properly reflected in the books. So there are just a lot of opportunities to lose track, to mix things up between accounts or between fiscal periods. So we're going to, when we talk about the income tax liability, we're going to suggest a way you can set up your analysis so you can keep very precise track of the transactions that are going through, and you'll always know where you stand.
Of course, our clients always make this easy by paying all their HST and source deductions and everything right on time and to the penny, of course. So that brings us to the end of the presentation. Are there any questions?
Um, I actually have a question for you, Jonathan, and I'm not too sure, Bob, you may have said this. I was actually responding to some questions on chat. So first off, one of the questions was from Nicole, if we can email a PDF of the slides or get a copy of the slides. So I'm assuming that won't be a problem to get me a PDF and we can email that out with the recording link.
I have no issue with that.
Perfect. That's good. I didn't think you would. So my question for you, which again, Nicole says thank you, which you may have answered, again, because I was responding there, I didn't hear. So with regards to liabilities, so when an accountant does the year-end adjusting entries, of course, the income tax is being entered in as a liability. When the client actually pays it and we enter it, how I just have been entering it under as income tax, just as an expense, the income tax payer, the corporate income tax expense account, which would, of course, credit the bank account and debit the expense account. Is there a different transaction that we should be using to remove that balance from the liability?
Yes, exactly. So any payments related to income tax should really go to either a prepaid corporate income tax account or corporate tax payable. That way we can allocate the appropriate amount of expense to the year-end statements.
Okay, so then instead of using the corporate taxes expense account, I should just be going right back towards the liability account.
Exactly. And I mean, if the liability account ends up switching balances at some point, which it should, because you'll have, at the end of the year, you'll have your expense booked and any true up will go to the liability. Once that liability is paid and you start paying installments, the balance of that account is going to switch to a prepaid corporate tax, even though the account might not change, the name might not change, and so on. Right. Bob, did you have anything to add on that? I believe this is our next presentation.
Yes, it is. Yeah, I could just say a little bit. We've been talking about the balance sheet perspective, but if we look at the income statement perspective, the income statement should be self-contained and represent the financial period that you're preparing the income statement for. So the income tax expense that shows there should relate to the net income that's being reported. So when you process a payment for a previous period to that expense account, it actually it's like scratchy nails on a chalkboard to an accountant, because you're processing something that doesn't really match the income that the income before tax that's being reported. So it's better if you keep all those prior period and all the payments, all those entries on the balance sheet. What the accountant does when he comes along, or she, they will look at the pre-tax profit and calculate a tax provision, do some CCA calculations and so on, calculate what a provision should be, and then that should be the number that shows in the income tax expense account. So that's a really great question, and one that almost always we see items posted to the tax expense account.
Right. Yeah, and I knew that was something that was common from many other people, but that's yeah. So I thought, well, there's a way that I can do it better. I'm always striving to do my job better and to make things easier for the accountants. And I know I'm echoing, so I apologize everybody for the echo. Now, is there anything else on this topic? Because I know you'll be doing the other topics going forward, so I don't want to kind of jump into those other topics. But is there anything in general that you see that, is a common thing that bookkeepers do that maybe we could make things a little bit easier on us or on you or on the client for year end, just by, something like that, just by doing a quick little switch? Is there anything else that you can suggest on this topic?
Yes. Perhaps just kind of like, we're talking about the period 13 topic, not the income tax topic. just
Right.
a general
Right. Just in
overview.
general. Right.
Just a general overview can reveal a lot. Have you reviewed your AR aging report and seen if there's bad debt that needs to be put in? We're going to have a topic about that. Are there hanging little amounts where customers have overpaid a few cents or underpaid a few cents that need to be written off? And the same goes on the other side for AP. And using AP and AR as they're intended from QuickBooks, I think this is very important. We have encountered situations where either someone has written as an expense straight out of the bank feed something that should be applied to AP, or they have what's another example? They have negative AP because they're assessing payments, but the invoices haven't been entered properly or been published incorrectly from a third party like HubDoc or Receipt Bank. So talking about the integration a little bit more, it's very important that your bills are published as bills and that your cash expenses are published appropriately and to the right account. Another area where we often see issues is undeposited funds. That should pretty much be only what's left that hasn't been deposited as of the end of the year. Bob, did you have anything you wanted to add to that?
Sure. One area that we often get in trouble with or have to spend a lot of time on is shareholder accounts. I sometimes think of them, or maybe other people think of them as your carpet when you're doing your bookkeeping or accounting, and it's very easy to sweep things under the carpet. So the shareholder accounts tend to be carpets, and if I see a strange transaction, don't know where to put it, it goes to the shareholder account. It's really important that the shareholders understand their balance with the company. So that's an account you should be checking on and communicating with the owners of the business periodically. I know when we used to do audits, we would actually have the owners sign off that they agreed with the balance so they could never come back later and say, well, the accountant processed that number to my account. I don't agree with that at all. So just to avoid problems, you want to communicate that account and be careful what you put in it.
Just to kind of add on top of that, if there's something you don't know, and it's going to happen. I mean, it even happens to us where we have to put something in an uncategorized expense or ask the accountant category and do a little bit more research to find out what the proper entry is. I would much prefer to see those questions in those spots than in shareholder loan, because in shareholder loan, there's a good chance that we're not going to find it. I don't know if everybody understands, but we obviously do a little bit more in-depth work than most tax accountants do. We don't just take your numbers, throw it in, and say, okay, good luck. We tend to have a look for things like opportunities and risks and things like that. You know, if things aren't being done properly, reconciliations forced, things like that, we're going to look for them as well.
Well, and that's definitely in the best interest of the client as well. So I know my clients that I've referred over absolutely appreciate that, and I know I appreciate that as well. Now, just to kind of add in a few comments on the best, like from a bookkeeper standpoint, the shareholders loan. So what I do is so first off, our practices are we actually do have an Ask Client, Ask Accountant that we use, and then we actually have reports that we run to make sure that we kind of don't miss this. So if there's something that we're not sure about, we'll stick it in there. And then, of course, if we don't catch it beforehand, but we review those every month, and I actually have QBO automatically email those reports to us, anything uncategorized, in case the client put something through as uncategorized or something else did, then we can catch it. So I try to review it monthly as well as at year end. But the shareholders, of course, from our perspective as bookkeepers, clients know that anything that is personal is going to be put through there, and they try to slip so much through. And so those balances sometimes are very high because the client's just hoping that that we're going to let this stuff go through. I mean, just as an example, we have one client who we were just processing last week, tried to put through him taking out his manager, his restaurant manager, for a dinner and a theater evening for his birthday. Well, they're also friends, and I said, no, that absolutely goes shareholders, because they did not take, it was not, the whole office was not invited, so therefore it either has to go on a T4 as a taxable benefit, or it's shareholders. I mean, bottom line with that. So sometimes those shareholder balances are up, and the shareholders know, or the owners know that they're up, because we did not let stuff get through that they wanted to get put through. So sometimes those are the reasons, and they'll play dumb when they talk to you, of course.
And you see some crazy stuff, like I know, I can't remember who it was who posted in one of the groups, but one of their clients tried to put through their condoms.
Oh, I heard about that. I heard about that.
No, that doesn't count.
Yeah, I don't think so. I don't think so. Exactly. So I mean, yeah, we see some crazy things that try to go through, but yeah, most time the clients, they'll play dumb when they talk to you, but they know darn well what we're, that we're catching all of this stuff. Especially I know with myself, because I look at every single receipt with an auditor's eye, and I tell all my clients that every single receipt that comes through, I'm going to question, is it reasonable? Is it justifiable? And can you prove it? If those three questions are not, a resounding yes, I'm not letting it go through. If there's any questions, of course, I'll stick it into the other account. So, like, for example, when we did see, something go through, if there's no name on it, I'll call and say, okay, was this offered to all the staff? Was this, something like that? But yeah. Now, also to add on best practices, and this is something that I actually saw on one of Seth David's videos, and I know Jonathan and I have been talking, and the return that I did after I did this little change was definitely a lot cleaner, or not the return, but the year end was a lot cleaner from your perspective, Jonathan, than beforehand. So to the bookkeepers out there, what I started doing is, rather than just doing my usual stuff where I would just I would look at my AP, I would look at my AR, I would, just kind of look at the key accounts, I actually started going through, and I just went through the balance sheet and the profit and loss, and I actually clicked in on every account. Now, that may sound more time consuming to do that, but that was my cleanest, quickest year end. And it had less questions from Jonathan, because I went through and I said, okay, was it, does this balance make sense? Was it reconciled? Then I went through my profit and loss, and I actually looked, was there 12 rent payments? Was there 12 of these? Was there 12 of those? Do those balances make sense? Is there anything that, that you might have extra questions, or other duplicate payments that have gone through, maybe something that should have been for a prior period? So that's how I started doing my year ends. And as I say, it's gone smoothly, very clean. I'm very proud of it. And then I know that, Jonathan had said that, that was actually quite cleaner than the last one, because I was able to catch things that I did not catch prior to doing that, just by kind of trying to remember which one's to spot check. So, I don't know. Do you have any comments on that, Jonathan?
Kudos.
Or Bob?
I think that's very valuable work to go through and just look at it with a kind of a high level eye as to do the balances make sense? Do the transactions make sense? For some of our larger clients, I've got a few clients that run several thousand transactions a month. I review every account, and I just give it a quick cursory look down every single detail. And I mean, it seems like a lot of work, but it's part of our quality analysis or quality assurance for those clients, and they need it, those particular ones.
And I'll just mention, it's the type of thing, like a lot of these tasks that we do, the first couple of times you do it, it may seem like it's taking forever. But once you've done it a few times, you can get really efficient. You can pick out those queries, the things that don't look quite right. You can pick them out pretty quickly. So don't stop doing it if you do it a couple of times and it seems to be just taking excessive time.
I think the more often you do it, too, the more likely you are to find a hole in your system that is not functioning correctly, and that gives you the opportunity to improve your internal systems as well.
Yeah. Oh, I completely agree. I completely agree with what both of you just said. That you're right. The second one, I did went easier than the first one, and yes, I was able to find that. Yes, the old way, there were definitely holes in the old way of doing it for sure. So,
Jonathan,
Yes, sir.
could we mention the checklist that we've developed for
I
hitting?
think Bob, go for it.
Oh, after we worked on a number of files from different bookkeepers, we found that we were writing the same questions over and over, like accounts receivable. Have you discussed with the owner of the business or the bookkeeper how much you should set up for as an allowance for doubtful accounts on the year-end receivable? So after I got tired of writing the same comment over and over, we developed a very quick and brief checklist. And I think if anyone's interested in that, it will make your communication and relationship with your tax accountant much easier because you'll be dealing with a lot of the issues that may arise. So if anyone would like a copy of that, I think we'd be quite willing to share it.
Yeah. Just to kind of go into our process a little bit more. That's the second questionnaire that we send. The first questionnaire is more generic in general, asking things like the business number and year end and certain other issues that we'll need for the tax return. And then once we receive that back, we send this through Google Forms, which I think is a very, very cool technology. And if you haven't played with it, play with it. There's a lot of opportunity there.
so yeah, I know I for one would love that, and I'm sure anybody that wasn't able to attend, and I know Nicole has said yes, please, and thank you for a copy of that questionnaire. So we could get that, and again, send that out with the video to those people that weren't here. I'm sure that would be very much appreciated by them as well.
Okay. Yeah. Any more questions or comments or?
If anybody has any, feel free to type it into chat or to unmute yourself and ask away. Right, well, I think that
looks like we're done. Well, I hope that you'll join us next month, last Wednesday of every month. Short webinar, 15 minutes, followed by questions and discussion. And yeah, I don't know if we've set for sure if we're going to do AR or if we're going to do income tax and the tax portion next month. But I'd be interested to hear people's feedback as to what they want to see next.
Or other topics. If you are interested, let us know what you'd like to hear about.
Exactly.
Yeah, absolutely. And maybe that's it. We can send it a brief questionnaire at the end as well, too, asking if there's any other topics.
Yeah, that's a great idea.
For sure. Yeah, absolutely. And then if there is anybody, as Jonathan has said, it'll be the last Wednesday of every month, same time. So if there's, if you know that you can't make it and you just want to sign up automatically for all the topics, let me know rather than having to sign up individually as we post them through the groups. I'll just go ahead and automatically add you in. And then if you can't make it again, you'll always receive the recording afterwards. Okay, and Lisa says thank you for all of this information today.
Oh, you're welcome, Lisa.
All right. Well, I guess if that's it, yeah, I'll stop recording. And if there's anybody thinks of any questions afterwards, just feel free to send them in.
Thanks, everybody.
Perfect. Okay. Thanks so much. We'll see you next month. Thanks, Jonathan. Thanks, Bob.
Bye.
Bye.
Okay, bye.